stock is 33% short,
These 5 stocks have some of the highest short interest in the market.
and they're working on a 50% correction right now from their recent highs, strictly because of the high short interest.
But MarketBeat's Thomas Hughes says this short interest sale is shopping season for these 5 companies that are all expected to see a big turnaround come November.
In the next reporting cycle, we are expecting to see some pretty strong results come out.
Will these riskier plays make it on your buy list during this September-October slowdown? Let's dive in. Thomas, so great to have you back on the show today with a really great list for our viewers that I want to dive right into right now. This is a list of 5 high short interest stocks that you should be looking at before November, before that next round of earnings season. I know it's not an election year necessarily, but there's a lot of market moves that could be coming in November.
Well, right. All of these stocks are companies that we've covered pretty regularly. We're bullish on all of them. They've all got very positive fundamental trends and very robust, strong outlooks. Right now, they've all got ridiculously high short interest. It is affecting their price actions today, kind of causing pullbacks and opening up buying opportunities. But come the next reporting cycle, we are expecting to see some pretty strong results come out, possibly outperformance, probably outperformance, certainly affirming their long-term outlooks, catalyst for rally. And with the high short interest in play, we could see, short covering rallies cause, accelerated, amplified price action, sharp rises in November.
Yeah, so if we do see this pullback in September, October timeframe, these are the names that you want to have in your portfolio on these pullbacks right now. What's that first company on your list that you should be looking at right now to add to your portfolio before November?
Yeah, the first name is SoundHound. This stock is 33% short, which to me is kind of crazy because they've got a very healthy balance sheet. They're self-funding growth. They're building their pipeline. There has been some concern about the growth outlook, but the most recent results kind of affirm that the outlook is for real. They're growing at a double-digit hyper-growth pace. They're expanding their verticals and their industries, their end markets. They're deepening penetration. They've got multiple tailwinds for growth. They raised guidance. There's a high likelihood that they will outperform guidance in the fall. Certainly reasons to expect the stock to move higher even without a short covering rally. But come the fall, with all these names, we're looking at upcoming results triggering potentially short covering rallies. And SoundHound is a very, very good candidate.
Now let's talk about what that chart is doing for SoundHound this weekend. I know Friday was kind of a crazy day in the market. Where does SoundHound sit this weekend? And would you expect a further pullback sometime in the next couple of months?
Well, right. So SoundHound pulled back from the top of a trading range last week, kind of confirming resistance at a level that had been set before. What I'm seeing right now is the market is moving within this range. We're kind of in the middle of the range, which shows some support. The indicators, MACD and stochastic, are still pretty positive, showing support following this rebound that we saw, from April to the week before. So it looks like the market is set up for a rebound. The next couple of weeks, month or so, up until November, we could see some more sideways action. We could pull back down to the bottom of this trading range near $10. But based on the fundamental story, the analyst trends, the expectations for results, I would certainly expect to see any low prices being used as a buying opportunity, and for support to be confirmed either before or right after the release, and for a rebound to begin soon after the release if we don't see this market regain traction and begin trending higher before then.
Before we get on to the next name on your list of 5 here, I want to talk about a quick warning of what this short interest could mean for investors. What do you need to be aware of?
Well, right now, what it means is there's a fair amount of uncertainty, certainly enough for people who bet on lower stock prices to put their money at risk. So in the near term, in the short term, leading up into November, we should expect some volatility. We should expect the price action to pull back. We should expect resistance levels to be confirmed. If we were to get a move above critical resistance points, that could be a trigger for short covering. That could cause a rally before then, before the earnings release. But I would really expect to see this market be moving sideways, consolidating, getting ready for that release, and then the action really to begin happening in November, late November, after the report is released.
That's a really good timeline for investors to keep in mind with all of these. Thank you, Thomas. So let's get on to that second name on your list.
Yeah, that's AST Space Mobile. It's only slightly shorter than SoundHound, about 30%. Again, there has been some concern about the pace of growth and revenue. This most recent earnings report wasn't quite up to snuff. They did miss on the top and bottom lines. But within the report, all of the details, all the data affirm the long term outlook. They affirm their expectations for accelerating revenue growth beginning in the second half, which means the current quarter. So, all setting us up for a catalyst later on this year. We're looking for hyper growth to start in the current quarter and then to accelerate for the next several quarters as this, space mobile companies network comes online. They're saying that by the end of this year, they'll have pretty solid coverage across North America. And then by the end of next year, we'll have full coverage and then also coverage in Europe and in Japan. So it's really, really big news for this company.
Yeah, a lot of growth on the horizon. Again, such a great concept of making cell phone service go into satellites instead of towers. Huge change for the industry. And space stocks in general are really moving the market in a lot of ways right now. Our latest premium article for our YouTube viewers has a list of 5 other space stocks that are really set to change a lot of industries over the next decade. You can scan the QR code now or click the link in the description to get that full list of 5 space stocks set to soar on MarketBeat.com. Back to ASTS Space Mobile, I am a little concerned about the speed of execution on this concept. Will there be adoption early enough, by the end of this year to actually show up in their earnings report? Is there a chance we could see the same earnings miss in November that we did this last quarter?
I don't think so because the company's current revenue is based on government contracts. It's already got a robust pipeline of contracts with all the world's global carriers. It's just a matter of getting the satellites up in the air, and they've been launching satellites. The last report, they had 6 currently up there. They're expecting to have like up to 30 by the end of next year, which is quite a bit for them, and that will give them quite robust coverage across the Northern Hemisphere and in their major markets.
Yeah, very interesting. Let's pull up the chart really quick for this one too. How much of a pullback have we seen just since the last earnings report? Any thoughts on where it could go over the next couple of months?
Yeah, so we're looking at about a 25 to 30% pullback since the last earnings report, which sounds like a lot, but this has been a pretty volatile market, made some pretty big moves over the last few months. So, 25% isn't really that big a deal. Right now, what I'm seeing is some support at the around $45, which was the launch pad for the most recent rally that began like in June, July. So as long as that level holds, I would expect to see this market continuing to move sideways in the $45 to $60 region, building up a stronger base of support at this level before moving higher later on in the year. Now, on this chart and with SoundHand and these other charts, there is an interesting feature called a convergence. This is in the MACD. The MACD measures momentum. And convergence is when the indicator makes a new high in coincidence with the price action, and it's just a sign of underlying strength. But in this case, we have a MACD convergence that's also an extreme peak. It's the most or the strongest momentum the stock has ever shown, which tells us that on this pullback, we're pretty much guaranteed to see the market retest the high, and it's very, very likely to move on to new highs. So in this scenario, when we break to that new high, we're looking at probably $15 to $30 of additional upside that will be unlocked within the next, probably couple of weeks after that new high being set.
That's a great indicator to watch too. Really great information today, Thomas. I like all of these technicals for our investors to pay attention to. Let's get on to that third company on your list.
That's Symbotic, and they are 30% short. Again, we have a great company. They're executing. They're growing at a robust pace. They're raising guidance. They've got a robust pipeline outlook for revenue growth. The analysts are on their side. All the trends are positive with, improving coverage, improving sentiment, improving price targets. The price targets are putting the stock at a new high. So really, it's just a matter of time before it gets there. We're looking for them to issue a pretty strong report at the next reporting season, which should be a catalyst for a fundamental rally. But then you add in the short interest, and again, you have this potential for a really robust surge in prices. And with the stock trading up at this high level where it is at the top of this long-term trading range, pretty important pivot inflection point. We get across that level. Technically speaking, we get some pretty robust upside in play where we're looking at, 50, 100% upside for the stock over the next 6 months, year and a half.
That's really good upside for this company. I want to talk about what they do and why, their entire company has you excited for future growth.
Well, right. So they automate warehouses. This is AI and robots. They're advancing the technology right now. There's certainly a company to watch for making major advances in robotics and physical AI. Today, in the application of what they're doing, they're automating warehouses for like Amazon and Walmart, and really automating their entire supply chains. So, like, products are coming in and they might not see a human being or very few human beings. They're being processed by computers and by AI, and they're being moved through the system by robots, all being controlled by this centralized platform. All of it's being built by Symbotic.
There's a really strong future in this sector for sure. Is this really a company that's a leader in this field, or are there other competitors out there in robotics for warehousing?
There are certainly competitors. Rockwell Automation is one company that's been automating manufacturing and industry for a long time. As far as the industry, I think Symbotic is the leading pure play, and they're certainly the leader from the AI angle and then their advancements of technology, I think.
Yeah, a really interesting third company that should have a lot of potential growth ahead of it. Let's move on to the fourth company on your list of really high short interest stocks that you should look at adding before November.
Right. This is New Scale Power, SMR. This is one of our small modular reactor nuclear companies. They are about 22% short at the last report. They're working on a 50% correction right now from their recent highs, strictly because of the high short interest and because the most recent earnings report didn't really boost the outlook. That doesn't sound like it's so bad, but in a world where we want to see things keep getting better, the market needs to see more than what it already knows for it to keep going higher. Right now, this company is not producing revenue, although the timeline to revenue has been greatly improved. Hence, we had this pullback. But what I'm seeing right now is the market's confirming support at the previous highs that were set at the end of last year. Pretty strong level. But what we're expecting for SMR by the end of the year is firm deals for U.S. Reactors. They've already got a deal in play to put a reactor overseas. There are no firm concrete deals for reactors in the U.S. yet, but we're expecting to see one by the end of this year. And when we get that, that will amplify the revenue outlook and provide a catalyst for this stock to move higher.
Yeah, this is one of those names that you've talked about. You had on another one of your lists suggesting as a buy in the last couple of weeks. And there were some mixed reviews from viewers on SMR. Some are saying that this stock is way too overhyped, that this is just a almost a meme stock category with people trying to get this stock price back up. Do you see real potential in the future for getting to that revenue period soon enough? Or do you think that there is something to be said about the potential for a short squeeze here?
Well, I'm not going to say there's not going to be volatility because this is a pre-revenue company. But as I said, their technology is proven. They're the most advanced as far as regulation goes. All they really need is firm deals to get these projects in line. We're looking for revenue to start within the next 2 to 3 years. Profitability will start almost immediately. So until then, certainly expect some volatility. But right now, the outlook is pretty strong. There's pretty high demand for nuclear power, only growing by the day with all this data center build out. AI is becoming more and more powerful by the generation. We'll need more and more and more power. So we already need these companies. So the need for them is only going to grow over time, and that all plays into the revenue outlook over the next year, 18 months. Expect some volatility, but I totally think that this stock can continue to trend higher. It also has a divergence like what we talked about before, but also it has increasing volume. And increasing volume just means that more and more and more people are coming into the market, showing a strengthening market, and kind of underscores that convergence and leads me to believe that, we'll at least see a retest of the recent high, if not another new high. And based on the outlook, I really expect to see more new highs come and probably sooner rather than later.
Yeah, one last question on NewScale is just talking about an entry point when we've continued to see this pullback. Like you said, we've had about a 50% correction. Do you wait until it starts to turn around and go back in the right direction before you buy in? Just wondering about the whole catch a falling knife theory of, do you wait until we see the momentum return for NewScale before getting in?
It's very hard to call the very bottom of a movement. So you can say right now it looks like it's the bottom, looks like a good time to buy the stock. I wouldn't, say that you were making a mistake to do it now. But as you're mentioning, the stock is still kind of moving lower. We haven't seen the market follow through on this confirmation of support with the rebound. So technically speaking, for a smart trade, what you would want to do is see the market form the bottom, bounce, and then come back and retest again. And then that second bounce, that second reconfirmation of the bottom would be your trigger point for buying.
Great advice on this one, especially Thomas. Thank you for that. Let's get to that last company on your list that's seeing a lot of high short interest now, but should still be on your buy list before November.
Right, that's Tempest AI. They're developing advanced databases and AI models to help treat and diagnose hard to care for illnesses, specifically cancers, but also building that database to help pharma companies develop new treatments. They're growing at a robust pace. They've got a robust outlook. They're raising their guidance. Profits are on the way. Um, Analyst trends are all positive, all pointing towards rising share prices. And with that 25% short interest, we certainly have a setup for potential short squeeze and at the very least a short covering rally provided we get some good news.
This one kind of falls into that category of saying, this is an AI company where you have to really perform in order to actually see the growth and confidence from investors. Is that performance coming for this company? Did we not see it this last quarter? And is that why we're seeing kind of this short covering that we're seeing right now?
Well, we actually did see kind of a good report at the last release, and out of all these stocks, it is struggling still with some resistance, but it has been moving higher the last 2 weeks, and the volume's up. So it looks like the market is actually buying into the story right now. It's possible that the shorts could get squeezed out of this one first. So right now, what I'm looking at is resistance around $85, maybe 85 to 90 range. If we get a move above that, would be the critical pivot for this stock. Sustain those levels, I would see it, continue moving higher. But again, yeah, that critical level, if we can't get above it, 85, the short sellers may, pile in and cap gains at that level. And there is a possible headwind with the analyst. Their trends are all positive, increased coverage, increased sentiment, increasing price targets, but the price action has outrun the price target revisions. So it's even above the high end range right now, which kind of sets the market up to pull back a little bit before it continues to move higher. But again, upcoming results, I would expect to see another good, strong report, certainly sufficient to keep the analysts happy, if not enough to spur them to make more upgrades and more price target revisions.
Yeah, with this one trading so far above that consensus price target and already seems a little bit of a comeback right now, do you expect to see more volatility rather than kind of sideways movement for this one from now until November?
Well, I think with all these stocks, and this one too, is volatility, but trading within ranges. There's going to be a low end of the range as the depths, the lowest the market will allow it to get. Keep it within that range to the top of the range for where resistance is. Waiting for that next report to either confirm or refute what we believe is going to happen.
A lot to consider for investors. Five stocks. Thanks for diving through all of these really quickly and giving a really great analysis of all of these different charts, Thomas. We so appreciate you going through this for our viewers today. Let us know your thoughts in the comments. I know we've talked about all of these stocks quite a bit over the last month. So, have your thoughts changed on either of them? Do you have confidence in the future of some of these companies? Are there some names here you like better than others? We'd love to hear from you in the comments, everyone. Thanks again for watching. And as always, happy investing.